Welcome everybody, and this is the first lecture on the topic profits and gains of business or profession. I have mastery to make this chapter easy with 15 plus years of experience. Right? Many people feel this is tough. Of course, it is lengthy, but it's not tough. We study our P&L account in intermediate and graduation level. Similar type of concept is this chapter. Only thing, it has certain more rules to follow. And I will make things easy for you. Will remember everything in the class. So just to concentrate, follow what I say, and you are going to rock this question. Most of the times in exam it comes. 95% of the exams, this chapter will definitely have around 10 marks question. So you cannot skip this chapter. You cannot ignore this chapter. And I am making this chapter easy for you. Just be with me, concentrate, and let us do wonders. So let's start this chapter. What is given? Business or profession, right? So what is business? We should understand first. Then we'll understand profession. Business is basically a trade, commerce, manufacture. Now what is trade? Buying and selling of goods. What is commerce? Commerce is trade plus aids to trade, or in simple language, trade plus services. Then comes manufacture. Manufacturing is converting raw material to finished goods. Now, if any activity which is either a trade or commerce or manufacture or any adventure or concern in the nature of trade, commerce, manufacture, it is basically business. Okay, please remember it is business. Where it is given? Section 2, clause 13. So according to section 2, clause 13 of Income Tax Act, business is trade, commerce, manufacture, or any adventure in the nature of trade, commerce, manufacture. Now what is adventure or concern? Because business is almost a continuous activity in many cases. But there may be some cases where it may be a one-time transaction. In some cases, it may be a one-time event. So, we call it as adventure or concern. So, if it is a one-time trade transaction, one-time activity which is of commerce, or one-time manufacturing, also we'll include it in what? Yes, business definition. So section 2 clause 13 says business means trade, commerce, manufacture, or any adventure in the nature of trade, commerce, manufacture. Then comes profession. There is no definition to profession. Profession is basically an occupation which books tell. Right? So profession is occupation which requires certain skill. So if you think about an architect, a chartered accountant who is doing audit, a cost accountant doing cost audit, a lawyer practicing as a lawyer, a teacher teaching, all these requires certain skill. And if you practically read a lot of literature, you will understand that profession requires a hard work. For through that you get knowledge, write certain exam or practical exam and get the certification for it. If you get all this, then you are a profession. Okay. So profession is basically knowledge which is acquired with lot of hard work and efforts. And ultimately you are certified for it also. Like a doctor gets his MBBS, MD degree. A chartered accountant, a cost accountant puts lot of efforts to get the certifications. So this is what profession is. Now they said profession includes vocation under section 2 clause 36. Now what is vocation? Vocation is a natural talent, a natural ability That is vocation. Certain people earn income by showing their natural talent, which generally people don't possess. Then in that case, that is vocation. From childhood, a person is able to do a wonderful comedy. Comedy is natural for him. From childhood, somebody may have developed certain speed of running. So they are naturally having that potential. This is vocation. So profession includes vocation. Now examples of profession, everybody know, right? A lawyer is a professional, a doctor is a professional, a CMA is a professional, architect is a professional, a sculptor, right? You would have seen Ram Mandir, how sculptors actually worked on it and created a wonderful art, right? And developed the great, uh, I can say, Murti of the Ram, right? So that is culture. So basically, these are all professionals. Now, I will tell you that, okay, term wise, the words business or profession may be different. But in practical world or in income tax, both are treated alike. Both are taxed alike. There is no difference. Okay. Now, let me tell you, let's compare your concepts of business or profession with your accounting. What you do in accounting? Sir, in accounting, P&L account we prepare. Yes. When you prepare, what you do? You debit all the expenses, credit all the incomes. Because now vertical formats are coming, horizontal are ignored. Can we say we'll write all the incomes first, then deduct all the expenses? Correct? So first incomes, then expenses, then income minus expenditure, and we get the net profit. This is how we do it. Similarly, here also in PGBP chapter, incomes are given in two different sections. What are they? Section 28, which I will teach now, and section 41, which we will discuss later on. These two sections talk about income. So if you have to call it as income under this chapter, under profits and gains of business and profession, it should be mentioned under these two lists. One is section 28 and second one is section 41. So once you write section 28 incomes, section 41 incomes, from that you have to deduct expenditures. And what are the expenditures? These are mentioned under section 30 to section 37. Expenditures are mentioned under section 30 to section 37. So once you deduct the expenditures, then you will get business income. Okay, this is how it is computed. Now there are so many aspects to it, but as of now simply remember this much. What I said, your section 28 is income, section 41 is income. When we total these two incomes, we have to deduct expenditures which are mentioned from section 30 to 37, and then you get the business income. So now this chapter is all about this only. But there are some conditions which are mentioned in section 38, section 40, section 43b, section 43. There are some special provisions like 44AA, AB, AD, AE. There are many. But generally, this is how we will deal. Now, to start with, shall we understand what is section 28? Are you ready? Right. Let's start. So what they said, that section 28 talks about income by way of business or profession. Now, what Reliance Industries is doing, Mukesh Ambani ji is doing. He is into petrochemicals. He is into retail. He is into something called as cinemas. Now Geo Studio has come. So what are all this? These are all businesses. What Adani is doing? Adani is also doing business. Green energy, cement manufacturing, right? You would have heard about Wilmer, Ashirwad. What is it? All these are business. So the incomes which these people earn, or let's assume a small Kirana general store owner, whatever he is also earning, a Pani Puri wala, what he is earning, right? All that comes under this point number 1, that is income by way of business or profession. A cost accountant doing his practice and earning money from clients is taxed under this part, point number 1. A lawyer getting fees from client covered under this point. An architect, an interior designer earning income. A professional actor acting and earning income comes under this point. So first point is clear to all of you. So we gave a lot of examples of business, lot of examples of profession. So income by way of business or profession. Come to second point. Now this is something odd, but still we have to understand. Exam wise, not relevant, right? They don't ask in the exams, but let us understand because it's there in the section. Income by way of managing agency. Now what happens is, suppose somebody is the CEO of a company in India. Like example, Tata Sons CEO was Cyrus Mistry. Now, Tata's vision of operating the company, running the company is different. And Cyrus Mistry has a different perspective. So there was a clash. And what happened? Cyrus Mistry was asked to get out. So his job as a MD, as a managing director, was now not there. He was terminated. So whenever such termination happens, or sometimes what happens, they modify the terms of the terms and conditions. This happens. So when there is a modification of terms, or when there is a termination of such top positions who are CEOs, CFOs of companies, that too Indian companies, in that case, they get huge compensation. If there is an abrupt removal, abrupt termination, abrupt modification of terms, then they get compensation. That compensation is taxed under this chapter, that is PGBP. Now they got lump sum receipt, correct? So you can say it is capital receipt. But even though it is capital receipt, it is in relation to business. It is actually deciding the direction of the business. For that purpose, taxed under this chapter. Okay, even though it is a capital receipt. Come to the point number 2. Suppose there is a foreign company. Let's say Twitter. Twitter CEO was Parag or some Rakesh, or I don't know exactly. But in India, there was a head. Now that head of India, Twitter, was suddenly removed. They were not doing anything. 6,000 employees doing the task, nothing. And now with Elon Musk, only 50 people are able to handle entire Twitter. Now where 6,000 people unnecessarily getting salaries and where 50 people effectively managing. That is the power of management. Right? So the India head was suddenly terminated. Get out. So when they were removed, right, they got compensation. And that compensation is taxed under PGBP chapter. Right? So first point was about Indian company. Second point is about a foreign company. Twitter was a foreign company. But the position is India head. This difference you should be able to understand. Okay? Come to third point. If somebody is managing agency in India, wholly or partly. Suppose example, there is a distribution company. Let's say Hindustan Unilever Limited is there. They are manufacturing lot of products and they are selling. So they gave agencies lot of contracts for distribution, different contracts they give. When they gave different contracts, some contract with some agency is terminated or modified, then definitely the agency will get compensation, and that is taxed under PGBP. Any person who is actually holding a position in the government or position in a corporation held by government gets any compensation because he is removed, then that is taxed under PGBP chapter. Similarly, fifth point also same. Any person, but here any business is okay. देखो, what's the difference between any person above and below? Above, it was all about government corporations. And the fifth part, they talk about any person, it is about any business where the owners, the top level managers are removed. Then it is taxed under PGEP if they receive compensation for termination or modification of terms. Then, sir, similar provision we discussed in salary chapter 2, right? Like profits in lieu of salary. So, yes, we discussed in salary also. But in salary chapter, it is a normal employee removal taxed under salary. But in PGAP, it is removal of top management, which is taxed under PGAP. This difference you should be able to understand. Now let's come to the third point. Income earned by trade or professional association. Now, our CMA Institute, a great profession, right? So, when we think about CMA Institute, it is a professional association. When we think about FICCI, Federation of Indian Chambers of Commerce and Industry, it is a trade association. So, when we discuss about trade association, professional association, they have something called as membership concept. So, they receive every year certain amount from their members. And they conduct lot of programs. For that, they charge fees. And there may be many other ways through which the trade or professional associations earn income. Like example, our CMA Institute, how they earn income? By actually giving training to the students. For registration they charge. For pre-placement training they charge. For magazine they charge. After qualifying every year you have to pay membership fees. For that they charge. You have to attend certain number of hours of training compulsorily. For that they charge. Ultimately, for learning for lifetime, they charge you something. To being a part of the profession, they charge you something. So the income which they earn is taxed under this chapter, that is profits and gains of business or profession. So income of a trade or professional association is taxed here. So I gave CMA example. Similarly, FICCI examples also you can think. CII, Confederation of Indian Industries. Assocham is one, right? So there are so many associations. Okay, let's come to fourth one. Fourth one is export incentives. You would have heard on 1st Feb 2025, the budget, where Nirmala Sitharaman spoke about makhana, right? When she spoke about popcorns, people criticized a lot because she increased GST. When she spoke about makhana, which is actually truly healthy, everybody applauded her because Bihar is the hub for exporting makhana across the globe. It is actually a costly item, little costly, little pricey, but it is very healthy for people to eat. And in Western countries, they are eating it as a breakfast also. Now, so if somebody is doing export of makhana, or in even India, you will be very shocked to hear people are exporting pencils, rubber, sharpener, compass box, papers. Yes. And in Western world, so many different countries, like even in New Zealand, which is so far away, our pen papers are sold. So if you are doing exports, then definitely you will get some export incentives. It may be a duty waiver, like no tax, or if you have paid some tax, government will pay you back. Cash incentives, if you export this much, will give you this much cash. Production linked incentive schemes are there. You produce this much for export, quality will give you this much tax benefit, or this much cash will give directly. Or there are certain certificates like duty free replenishment certificate, or there is something called as duty entitlement passbook schemes. You have to only remember the names, no need to go much into detail, because already this chapter is so lengthy, right? So if you transfer this certificate temporarily or permanently and get certain money, that is also taxed under profits and gains of business or profession. So when you get the incentives from government, it is your income and it is taxed under PGBP chapter. Come to the fifth point, your gift or perquisite. Suppose example, you are working in Reliance and you are working so hard day in, day out with commitment that Ambani ji was so happy. He said, "Aapke liye Rolls Royce car gift." So during the course of employment, you got it, correct? So it is taxed under salary chapter. But suppose example, if Mukesh Ambani gives this car as gift to one of his clients, then it is taxed under PGBP chapter. Okay. So basically gift or perquisite. It may be given by the supplier to the customers. Correct? This happens. During the course of business, this happens. You would have seen so many medicine companies, pharma companies giving lot of gifts to doctors. Taxed under profits and gains of business or profession. Okay, done. Shall we go to the next one? So we have to think like this. So we discussed any business or profession, any compensation received for termination of agency or MD's employment. We discussed second point. Third point, we discussed income of trade professional association. Fourth one, export incentive. Fifth one, we discussed gift or perquisite. Similarly, suppose example, an employee is getting salary. Where it is taxed, tell me. Salary chapter. Obviously salary chapter, sir. Great. But if suppose a partner is getting salary, partner is the owner, correct? So when partner of a firm is the owner of the firm, he is getting salary, where it should be taxed. Cannot be taxed under salary. Sorry. Arey, partner, he is not employee, correct? Partner is not employee. So that's why it cannot be taxed under salary. To tax it under salary, employer-employee relationship should be there. But partner is not employee. He is the owner of the business. So that's why partner's salary, partner's interest, partner's commission, all are taxed under profits and gains of business or profession. Similarly, you may think that key man insurance policy. Now when this word comes now, all my students get doubt. Sir, you tell key man insurance policy in salary chapter also. You tell the same in PGBP chapter also. You tell the same in other sources chapter also. What is this, sir? Same name is actually covered 3 times. And in first chapter you say same income cannot be taxed twice, no double taxation. Arey, I agree. Keyman insurance comes in all the 3 chapters. But it is taxed to different persons. Like example, suppose example, a company takes keyman insurance policy on the health of employee, for the employee. Now if employee or his employee gets it, let's assume, then it is taxed under salary. If ultimately the policy matures, the employee gets the money, taxed under salary. If employer gets the money on maturity, taxed under PGBP. If employee's family member gets it, then taxed under income from other sources. Are you able to understand? So ultimately, who is going to receive the money on that key man insurance policy? Is it the employee himself? If yes, tax it under salary. Is it the employer going to get it? Tax under PGBP. Is it the employee's family member because employee died? Then tax it under income from other source. Suppose key man insurance is taken not on the employee but on a agent of the company, right? Some distributors are there, on that key man insurance is taken. In that case, agency is a business, correct? So even if the agent receives it, it is taxed under PGBP because it is business. Okay, like this you should be able to understand the topic. Imagine what will happen in that case, what will happen in this case. And then there are a lot of AI tools to ask the same question. I'm telling AI tools because in income tax you can ask me, I'll answer. Direct tax you ask me, I'll answer. GST customs you ask me, I'll answer. Maybe in law you will ask me, I'll answer. But there may be many things which you want to know. Ask right questions to AI, it will give different answers. Try with Gemini from Google, try with ChatGPT, and then you see who gives more accurate answer. You can rely on that. You'll get some idea. Okay. So let's come to the 8th point. Now what happens is you have a lot of stock in the store. You are actually a seller of furniture. There is a lot of stock in the store. Your office requires some furniture. So what you did, you took some furniture from your store where you are going to sell it. That means for you, furniture is stock in trade, correct? You took it and you installed that furniture into your office. So what does this mean? You converted the stock in trade into a capital asset. Now you will show it in as business assets in balance sheet and also claim depreciation, correct? Earlier, it was just purchases and sales. Now you converted the stock in trade into a capital asset, which was held for sale. You are now using it for office. Okay. So in that case, even though, did you get any money? Furniture was there in your showroom, it came to your office. So you will not get any money, correct? But still, it is taxed under the chapter PGBP. Whatever was the sale price, fair market value, on the day when you converted your stock into capital asset, that will be treated as your business income. Of course, from that, whatever you spent to purchase that will be deducted as cost. This will not only be done in your income tax, but also in accounts you do the same. Because you should know what is your true profit, right? Otherwise, what will happen? Lot of purchases happen, but there is no sales. What happened? You will not be able to understand. So that's why this treatment is required in accounting as well as in income tax, right? So when you convert your stock in trade into a capital asset, you have a furniture showroom, you took some furniture to your office. In that case, you capitalize that furniture and claim depreciation under income tax. And whatever fair market value of that furniture is, treat it as business income. Correct? This is how you should do. Depreciation also we'll do it under PGBP chapter itself. Okay, let's continue further. Now, if suppose there is an income generated out of capital assets mentioned under section 35 AD. Let me tell you, 35 AD is a very special section in PGBP. It talks about specified businesses. It talks about what? Specified businesses. So, specified businesses means hotel with 2-star or more accommodation, hospital with 100 beds, right? Hotel with 2-star or more accommodation, hospital with 100 beds. Are you able to understand what I said? Correct? Similarly, inland container depots, honey beekeeping, cross-country pipelines for petroleum and natural gas. These type of capital intensive businesses are there. Na? So that capital which is created, that infrastructure which is created, that is basically a capital expenditure mentioned under section 35 AD. And under 35 AD, 100% deduction for this capital asset is given. So there is no depreciation on a regular basis. 100% deduction in one shot itself. Now, you got the deduction under PGBP. Fine. But now, when it is destroyed, you get insurance compensation. Correct? Because such capital expenditures are not incurred without insurance. There is insurance for sure. So when you get the insurance compensation, it is income by way of capital asset mentioned under section 3580. So when you get that insurance compensation, it is taxable under PGP. Dekho, when you spent, you got deduction, correct? Under 3580. When you get the money back, it should be taxed. That's it. Okay. As simple as that. Last point. In section 28. What is it? Suppose you have written a book and you give the rights to publish the book to some publication. The publication gives you an MOU, Memorandum of Understanding. In that MOU, what they will tell? They will simply tell, in that MOU, they will simply tell you that you cannot share this right to publish to any other person. Such MOUs, such understandings are there in case of copyrights, trademark, license, patents. So there are so many. So if you are getting some consideration for not sharing the know-how, not sharing the patent, not sharing the copyright, trademark, then that income is also taxed under PGBP. There is one more concept that is called as non-compete fees. That means if you are not competing with the employer, for that purpose also, if you get some money, that is also taxed under PGBP. But suppose if you are transferring the right to manufacture, see, difference is there. One is not doing anything, sitting idle, right? You do business, I'll just sit idle, I'll not transfer any rights. For that, I am getting some compensation. That's taxed under PGBP. But if I am transferring the right to manufacture, for that, when I get the compensation, it is taxed under capital gains. So if I am transferring the right to manufacture, it is taxed under capital gains. This you remember, that's it. Okay, very good. Now, complete section 28 we understood. Easy or difficult? They gave different incomes and different nature of incomes they gave. We tried to understand. Now let us recap. Chal, come on. I believe you will remember in no time. Hey, any business or professional income, obviously it is taxed under PGP. Any compensation if MD is removed, wherever he may be here, but it should be either Indian company, or if it is a foreign company, the MD should be for India, or if it is an agency, agency must be in India. If it is government or government corporation, the person removed should be or terminated, or terms should be changed for the MD type of people, right? In that case only the compensation received is taxed under PGBP. If it is normal employee, taxed under salary. Okay, the compensation, even though it is capital receipt, still taxed under PGBP. Third point, trade or professional association like CMA Institute, CA Institute, FICCI, Ashocham, CII, all that examples I give. Earning income from members taxed under PGBP. Fourth point, we discussed export incentives like cash incentives, duty drawback, right? All these are incomes. Okay, right? And duty free replenishment certificate, duty entitlement passbook scheme when you transfer, that is income taxed under this head. Okay. Then you receive gift from your client, right? You get some asset as gift, perquisite as gift, then it is taxed under PGEP. But it should be because of business relation. If you get, it is taxed under PGBP. Virat Kohli getting some cash prize for Man of the Match award is taxed under this chapter, right? Are you able to understand? Right? It's an award. Suppose I play cricket match and I win Man of the Match, it is taxed under other sources. Why so? I am not a professional. I am a casual player, right? But Virat Kohli is a professional. So his income from cricket is taxed under PGP. Okay, are you able to understand the difference? Right? So any gift or perquisite taxed under PGP. Then partner receiving salary, commission, bonus, right? He is the owner. There is no employer-employee relationship. So partners remuneration, commission, bonus received from the firm taxed under this chapter. Then key man insurance policy received by the employer is taxed under PGEP. If received by employee, taxed under salary. If received by family member of the employee, taxed under other sources. Right? Then we discussed that capital asset, furniture example I gave. Na? Stock in trade, furniture, converted to capital asset, put to use for office, taxed under PGEP. Right? On fair market value basis. Of course, whatever is the cost will deduct to compute capital for compute business income. And I'll tell you one more thing. We'll also claim depreciation on the furniture. Okay, let's continue further. Later on, I'll tell you that furniture, when it is put to use in office, it is shown as a capital asset. If that is sold again, you will get capital gains. Okay, right. Next thing, you understand that section 35 AD assets like hotel with 2-star or more accommodation, hospital with 100 beds, right? In that case, whatever income you generate because of the destruction, you get the money from insurance company taxed under this chapter. And for not sharing patent, copyright, know-how, license, you get some money that is taxed under PGBP. But if you are transferring the right to manufacture, that exclusively will be taxed under capital gains because there is a specific amendment this time for it. Okay, be careful. Now, we understood entire section 28. Let me recap for you the original concept I said. I said that our income accounting P&L account and income tax business income computation are almost the same. But because of a lot of rules, income tax become little tough. Correct? So what I said, in accounting we write income minus expenditure. Correct? To get the net profit. In income tax what we'll do? Section 28 incomes, section 41 incomes, we'll do the total of incomes minus expenditures are mentioned under section 30 to 37. 30 to 37. And when we deduct that expenditures, what we'll do? We'll get the business income. But what are that expenses? What is mentioned under section 30? Let us discuss now. So admissible deductions we are discussing. In that first one is section 30. Rent, rates and taxes, repairs and insurance of building. So please remember here we are only talking about building. So when I speak about rent, can you pay rent to yourself? You are staying in the property. You are the owner of the property. Can you pay rent to yourself? The answer is no. Right? In income definition also what we discussed. Notional income is not an income. So that's why if sole proprietor is showing rent in P&L account for his business, which he is paying to his own building, it is not deductible under PGBP. Okay. But if suppose there is a rental agreement you are paying to some other person, then obviously that rent is deductible. Even if you are paying rent to the partner, suppose the building is used by the firm for partnership business and the building is owned by one of the partners. So the firm is paying rent to partner. In that case, in firm's accounts, the rent paid will be treated as expenditure. It is allowed as deduction. And for partner, it is income from house property. So please remember, there is a special explanation inserted this time that any rent from house property building will be treated as income from house property only and taxed under house property head only. You cannot tell any reason to tax it under PGBP. No, for me building is stock in trade, I am a real estate owner, I am a contractor, I construct buildings and sell. So rental income is incidental to my main business. So rental income, I'll show it under PGBP chapter. This is not possible now, right? This way, many people evaded the tax from years together. Government covered this loophole. We were telling that this tax avoidance. So tax avoidance happened this way by showing your rental income of house property under PGBP. But that loophole is covered. Okay. So again, come back. Hey, I'm trying to compare so many chapters so that you get the real feel of the subject, that ultimate confidence, right? Let's continue. Rent. So rent is paid by the business to some owner, that is allowed as deduction. Even if it is due, it is allowed as deduction. But rent paid by sole proprietor, right, for his own building, for business, he cannot claim deduction. Rent paid by firm to partner can claim deduction. But for partner, it becomes taxable income. Okay, under house property chapter. Rates and taxes. Now, if it is a building, obviously some property taxes would be there. Water tax may be there, right? Sewage tax may be there. So whatever property related taxes are there, that you can claim it as deduction here. But when I talk about taxes, it can be claimed as deduction only if it is actually paid. Suppose if it is due, can you claim deduction? Dekho, rent due, you can claim deduction. Repair related expenditure due, you can claim deduction. Insurance related expenditure due, still you can claim deduction. Whether it is due or paid, you can claim deduction. But taxes, only on payment basis you can get deduction. Taxes, if it is due, no deduction. Right? Section 43B restricts. Okay? So what did you understand? Rent, paid or due, claim deduction. No problem. Taxes, only paid, then claim deduction. Repairs, insurance, paid or due, still you can claim deduction. This difference you should be able to remember. And why I'm repeating so many times? Sorry, एक बार बोल के छोड़ दो ना. अरे एक बार बोलो तो याद रहता है क्या तुमको? If I just tell for one time, will you remember? Is it so sharp? No, na? So that's why I repeat so many times. For you to remember forever. Right? Let's continue for the third point. What about repairs? Repairs are divided into two parts. Repairs which are current, revenue in nature, regular repairs are there. That you can claim as deduction under section 30 itself. But if it is a capital repair, like example, you are adding one more floor to the building. So we call it as capital repair. You cannot claim deduction for capital repairs here. What happens to capital repairs then? It will be added to the cost of the asset. Capital repairs, what we'll do? We'll add it to the cost of the asset. And then claim depreciation under section 32. So now, if I ask you, can we claim revenue repairs as deduction under section 30? Revenue repairs of building, can we claim deduction under section 30? The answer is yes. If it is current repairs, revenue repairs, same meaning. Can we claim capital repairs as deduction under section 30 if it is for building? The answer is no. Then what we should do for capital repairs of building? Add to the cost of the asset and then claim depreciation under section 32. Okay. Then insurance of building. Obviously, if you are paying insurance for the building, you can claim deduction under section 32. Even if it is due, you deduct, no problem. Okay. This way you should be able to understand. Now, let's come to the next topic, and that is repairs and insurance of plant and machinery and furniture. Section 31. What I said, repairs and insurance of plant and machinery and furniture. So if it is repairs, same story again. What is it? Current repairs, revenue repairs allowed as deduction here itself. So some plant and machinery there was a repair, some furniture there was a repair, current repair, routine nature, right? You claim deduction here. And if it is a capital repair, then you cannot deduct here, but you can add to the cost of the asset and claim deduction, that is depreciation under section 32. Now, if some repair is given, how will you distinguish whether it is current repair or capital repair? Suppose if it is maintaining the capacity of the asset, then it is current repair. But if it is increasing the capacity of the asset, then it is capital repair. Correct? This way you should be able to differentiate. Insurance also, for plant and machinery we take insurance. For furniture may take insurance. In that case, you can claim insurance premium paid as deduction. Whether it is due or paid, no problem. But sir, what about rent of plant and machinery? Taxes in relation to plant and machinery? They are not discussed under section 31. You are so concentrating that you are getting genuine doubts, and I appreciate. So what I said, we did not discuss about rent, we did not discuss about rates and taxes for plant and machinery and furniture under section 31. Because they are not given here. Then sir, where to get the deduction for rent of plant and machinery, rates and taxes in relation to plant and machinery? The answer is under section 37. Suppose you have taken the plant and machinery on rent and you are using, then claim deduction of rent under section 37. Similarly, you paid GST or you paid customs duty on plant and machinery, then obviously you can claim deduction for it under section 37. But GST, there is a rule. If for plant and machinery, GST, you take input tax credit. So if in the question it is written, input tax credit is claimed for the GST, then you cannot claim depreciation here. Okay? But input tax credit is not claimed for plant and machinery. Then you can claim depreciation under income tax. So under GST, you take input tax credit, then forget about depreciation income tax. Right? If you want to take depreciation under income tax, then forget about input tax credit under GST subject. Okay? This we will discuss when the GST comes in detail. Right? Let's understand that we spoke about repairs and insurance of plant and machinery and furniture under section 31. So revenue repairs, current repairs allowed as deduction under section 31. Capital repairs not allowed, but they can be added to the cost of asset. And what we can do? We can actually claim depreciation under section 32. Rent of plant and machinery or furniture is deductible under section 37, not here. Rates and taxes can be deducted under section 37, not here. But we have to see multiple laws, right? So I feel you understood what I wanted to talk about. the section 30 as deduction, 31 as deduction, right? Out of 30 to 37, 30, 31, 32, right? 33 is there, 34 is anyhow not there, 35 is there, 36 is there, 37 is there. So around 7 sections are there, and 2 sections we completed only because they are very small. 32, 35, 36 are super lengthy, right? So what we'll do is we'll put the video to an end here, and in section 32 we'll discuss lot more about depreciation, and it's a lengthy part also. It will itself consume 1 hour. Okay, right? So let's put an end to this video. Bye everybody.